Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the New York closed, the markets, especially for the Aussie, sterling and euro, has strengthened. And some of them nearly posting a Marubozu candle, which needs to be confirmed, of course, by the New York close. Nevertheless, looking at the current pattern for the Australian dollar, we can see the RSI through the midway point and therefore holds for a potential challenge of 68.65, which I have waited for a couple of days now for since the rejection of that low area around 66.80.90. Reassess from 68.65 because if breached, would see a further rise maybe through the 60-day moving average and on towards 70 cents as a potential target. The euro was also firmed up after the posted weak hammer from last night, and with the current market challenging the resistant area, which is around 100.65.75. A break above there, or New York closed more to the point, would see a further rise and look towards the region of 101.60.80 as a potential target. On Thursday, as widely anticipated, the European Central Bank matched the market's forecast and raised its key benchmark by an unprecedented 75 basis point rate hike to 1.25 to combat raising inflation. That is, in the Eurozone, inflation reached a record high of 9.1 last month and therefore could see further hikes in the coming months. Also overnight, Federal Reserve Chairman Jerome Powell reiterated that the US Central Bank would continue to raise interest rates. Looking ahead though, the US federal officials are soon to enter a blackout period as we get closer to the FOMC's 2021 rate decision. If the market can continue on, any pullback should find support now around the region of 99.5. Looking at the dollar yen, well, it seems that the bears have come back into play after the rejection from that 144 area. Now looks further to the downside and to a potential target, that is, of 142.50.60. A close beneath there would give further scope towards 139.5. Heavy RSI coming through here could actually trigger further stop losses as this market is potentially quite long. Putting aside the market performance for just one moment, in the US, at the New York Stock Exchange, they observed a minute of silence to honour the passing of Britain's Queen Elizabeth II, the nation's longest-serving monarch. From the current pattern, though, moving on, is that we can see a Marubozu candle in place. I do like the way this whole market is shaping up to a potential strong rally, and therefore close above 115.70.80 would give us further indication, that is, to the strong hammer that came through here, and therefore look towards 116 to 118 as a potential target. In light of that candle, the RSI and the hammer does present itself a strong case for the bullish move. The dollar index, which measures the greenback strength against a basket of mixed currencies, has plummeted now to 109, and it's just breaking through the handle there. Therefore, has it strengthened, as you can see here with many of the currencies. Looking at gold, we get a close above 1,719, which we're just through there now, would give us further indication up towards 1,730 to 1,750 as a potential target. Any pullback should find support around the low 1,700 region. And wrapping up with oil, well, the market is attempting to reclaim some of its losses that we saw earlier this week after plummeting 5%. In light of the pattern, we may see a rise up to around 84.70, the target, but I feel the recent plummet and also the fact that the technicals are still somewhat heavy and the ADX is still trading negative, that we may get a revisit to the downside with a base now seen around $78 a barrel. Well, that wraps it for the week. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.